Let's bring on board Andrew Freris, CEO at Ecognosys Advisory. Andrew, great having you. Let me first start off by understanding your take with regard to AI and its impact on some of the tech stocks, because not only are you seeing pressure in India technology, you're also seeing pressure in US tech stocks. Now, I know you've been bearish with regard to US equities since a while now, but give us a sense of tech in particular. What's playing out there in your opinion?
Very straightforward. We're not going to go back again whether there is a bubble on the artificial intelligence stock, because this is a very, very old story. Now we have turned it around, whereby the strong performance of artificial intelligence in terms of cutting off jobs is going to hit not the major artificial intelligence market, but most of the markets that are producing software for smaller companies. You know, I despair in that for a very, very simple reason. Nobody, look, I will be willing to come to your program and eat my hat in front of your clients if I am wrong on that. I might be misleading, but I would like to see a certain amount of information on what kind of software will the major artificial intelligence companies that are spending quadrillions in setting up power plants, in setting up computer centers, what kind of software they're going to produce and who is going to buy them and how much money they expect to make out of that. Okay, I'd love to see this. I don't get this. And I get in return continuous information that the take-up of artificial intelligence software by small and medium-sized firms is anything well below 50%. In other words, half of them don't buy artificial intelligence software. Big companies do buy. Well, and I would like to know what kind of software they are buying. You know, I won't say there is any kind of secrecy. There is such absence of information that makes me absolutely bananas that people think that artificial intelligence is some kind the golden thing that is going to come down from heaven and save us all. Okay, where is the information? I like to know what the artificial intelligence is going to do.
Andrew, do you see investors, now moving into treasuries as a result of the kind of volatility and unwind we are seeing in three big asset classes? One is the AI-led investment or infra companies. The second is the crypto, and the third one being the precious metal.
Well, I'll tell you one thing that I do like, and I'm talking about a country which is a major holder, India, a major holder for gold. Mercifully, a lot of it is for familiar, traditional, and jewelry functions, and that is perfectly okay. But if anybody tells me that I'm buying gold because I'm worried about the future of my family, okay, I'm going again to go into despair. Okay, so you buy the gold, and one day you don't have a job, you don't have a house, and you need to sell gold in order to buy food for your family. What are you going to get? You're going to get US dollars. So anybody that buys gold as a haven of uncertainty away from US dollars is such a paradoxical thing to do that it drives me bananas. But anyway, I don't hold gold. When my clients ask me about this, I tell them, I will give them the charts, I will tell them what has been happening so far, and if they ask me, should they buy gold as a safe haven for uncertainty, I will tell them, no, I will not buy gold as a safe haven for uncertainty, but I will definitely buy US government bonds. Why? Okay, because the bonds do have a return. The bonds do yield something. The bonds are backed by the good faith of the United States government, however much this is now in a rather short term of pricing. But it is something. As for the Bitcoins, I'm sorry, I'm absolutely against the notion of Bitcoin because it's not an asset. It's backed by nothing. It's backed by absolutely nothing. So people holding it as a haven for certainty, well, it just saw it. It went from 90 to 60. Well, if that's a safe asset, it's not an asset. It's not backed by anything. So why people hold it? I have no idea.
So therefore, where should one invest at this point, Andrew? You're saying that the AI trade is overdone. You're saying US markets are overvalued. you're saying gold, silver, in terms of the way in which they've run up, was unsustainable. They're coming back off, but still don't hold them. What should one buy at this point?
Well, I just said looking at U.S. government bonds makes some kind of sense because the yields are high. Another good thing is to look at the following. Look, this is not me forecasting. So far this year, the S&P has been the worst performing in relative terms major index. It's something like up 1.5%. Well, okay, Singapore is up 4%. South Korea, I've forgotten, is something like nearly 25 to 30% up in US dollar terms. Taiwan is, again, I might make a mistake here in numbers, but we're talking about a 10% up. So why on earth should anybody in this year buying US government shares, which are going to perform very likely in exactly the same way they did throughout the year 25? In other words, the S&P was the worst in relative term performance of a major index. So please, go ahead and buy some more. Carry on repeating the mistake. There are very nice Asian stocks that will perform significantly better about the the United States assets. And also, all the numbers I'm giving you are in US dollar terms. So once again, we're back, in fact, on holding an asset which is performing also well in US dollar terms, at least in terms of the exchange rates of the country in which the shares are traded.
Buy Asia. All right. Thank you so much, Andrew, for coming in and speaking with us. Always a pleasure having you first thing in the morning to give us your perspective.
Keep inviting me.
Right. Thank you so much, Andrew. All right.